Hi guys, welcome to the weekly wrap. So this week has once again been a very busy one in the marketplace. So let's start off with that sell-off we saw in US equities. So we did see the S&P 500 close lower by 1.3%, with US equities slipping to their lowest level since around mid-August. So there were five main catalysts behind this move. So firstly, we did see some technical plays. So you saw the Nasdaq, it did break below its 50 DMA. We saw the E-mini S&P break below that key psychological 1950 level. And we saw Apple shares break below that carefully watched $100 level. And we also did see the Russell 2000 enter into corrective territory. So alongside this, we did also see talk of monthly rebalancing, a large US fund liquidating positions, and we did see some lackluster US and Eurozone data, although Eurozone data to the downside isn't too much of a surprise these days. And we also did see some geopolitical unrest, notably Hong Kong, so we'll be keeping an eye on that moving forward, as it could be a key factor for the markets. So on Thursday we did see the ECB interest rate decision, where the ECB kept rates on hold as expected. This is given that last month we did see ECB's Draghi say the interest rates had reached their lower bound. So as was to be expected, all eyes were on the press conference, where participants were looking for any further details on the ABS programme. So the main takeaway from the press conference was the ABS programme is to run for 2 years, and not the 12 months that some had expected. So therefore the main implication of this is that it reduces the imminency of a potential QE programme. So Spanish and Italian banks were hit alongside the slip in peripheral debt following this announcement, although do note Greek bonds were provided some reprieve given their junk bonds now do meet the ABS requirements. So then following this, we did see Euro dollar provided some reprieve, although it's definitely going to see the week out in negative territory given the strength seen across the US index throughout the week. And then just to wrap up, we did see that non-farm payrolls released today, so that came in at 248,000, a lot higher than expected, and following on from last month's lackluster reports, although that previous was revised higher. And we did see the unemployment rate fall back below 6%, so a very strong report there from the US. So that is all from me, and I hope everyone has a fantastic weekend.